Andrew Coleman, welcome to the podcast. Do you mind giving us a bit of a rundown on your background and also what you guys do at Team Invest Private?
Thanks, Alex. Thanks for having me. Look, we're an ASX listed investment house focused on compounding knowledge and wealth. And what we really do here at Tip Group is three verticals. The first is we do investor education and corporate advice. Think of it like a old school investment bank aimed at teaching people, not just providing the investment banking, M&A, consulting and other services. Secondly, we then have a funds management business. So rather than just teaching people what to do with their capital, we invest it for them. And then lastly, we have our own third vertical, which is our own balance sheet, where we manage our own capital along exactly the same ways. Really, in terms of the scale of that organisation today, about 600 staff, about 160 million revenue, and operating across Australia and a little bit into New Zealand.
Amazing. So, I guess the journey, the company founding, when was that? And I guess what did the early days look like?
Yeah, absolutely. I think it's always fascinating when you hear people's founder stories, right? Because they get turned into this myth after the fact that makes it sound like there was this sort of brilliant plan to make it all happen. But in reality, things don't work that way. They are much more serendipitous than luck. So our company story goes back to 2001, where a man by the name of John Price was head of mathematical finance at the University of New South Wales. And he was doing a huge amount of research into this fascinating question, which we know in academic literature, which is how is it that active fund managers fail to beat the market with great consistency. In fact, 80% of active fund managers fail to beat the market before fees, which is statistically just sort of one of these crazy anomalies, right? Like they should be at least 50-50, right? Flip a coin, you end up above or below the market, right? So how is it that it keeps failing? And it's constantly used, or this idea is constantly used as proof of the concept called the efficient markets hypothesis, which is this idea that somehow the market aggregates intuitively all the information available and therefore accurately values all assets all the time. And of course, the problem with that thesis works great in theory, no one's been able to disprove it, but it also sort of doesn't make a lot of common sense when you look at the data. So what I mean by that is that companies will move 30 or 40% in market cap over the course of a year. That doesn't make sense. A company like Microsoft hasn't changed in value by 30 or 40% over the course of a year, right? Up, down, sideways. And then similarly, there are great investors like Warren Buffett and Peter Lynch and others who seem to be able to beat the market consistently. And yet, again, the efficient markets hypothesis says it should be a random walk. This shouldn't happen. And so what John was doing was trying to do research to work out how this occurred, being an academic, not trying to make money off it, but just understand what was going on. And what he found was a really interesting thing, which is that whilst there was no quantitative metrics to help you beat the market, there actually were a whole bunch of quantitative indicators that helped you do worse than the market. So in other words, were indicators that you were going to mess up and underperform. And so, of course, if you've got a little bit of a maths background or just common sense background, you can sort of say, well, if I could just do everything the market does without the mistakes, then by definition, over time, the average of my results would be better than the market because the market includes the good stuff and the bad stuff. And so that was the genesis of our business. That was back in 2001. Fast forward to about 2007, John met a group of us who were sort of business people and those in finance, and was looking through this question of, how do you take this academic research and make it valuable for people in the general sort of public? And the other co-founders there, Howard Coleman, Mark Morland, Regan Paslow, myself, met John and sort of said, well, they started doing this as an investment club. Meet around a coffee shop, let's look through this, and started to systemize the business. And by 2012, when I then came across, we turned it into a company. So, it's sort of one of these classic questions with all founders' journeys of that joke of the 10-year overnight success. It was about 10 years from idea of John's through to an actual business being formed. But that 10 years was quite critical to formalize a way of doing business and understanding investing that was replicable and has obviously then meant that we can grow at really quite a rapid click since then into the size of organization we are today.
Yeah, well, it's an interesting story of how the company was formed. So I guess the company back then when it was I guess formed in 2012 compared to what it is today. What did the early days look like compared to today?
Yeah, basically it was a formalized investment club in the beginning. So really in our very first days as a business, what we were was a group of high net wealth individuals and interested people meeting once a month over coffee to talk about investments and trying to use the sort of learnings from John's research. and then building out systems and processes around that. Whereas, fast forward today, we're managing not only to teach people that, which is a core, and has always remained a core part of our business, but the 90% plus of our business today is not doing that. It's actually managing money, our own and others, using those same principles. And so, it's sort of funny when I describe that to people on the ASX, because they see us today as a fund manager and an active owner and investor. And then I talk about our business starting in education and our business starting, sharing ideas over coffee. It's such a weird dichotomy, but it's a logical progression if you lived it. It's just not logical when you look back on it, as is so often the
Definitely.
case.
Definitely. So I guess in terms of the growth of the company, which has seen quite strong growth year on year, I guess how have you managed to achieve that? I guess that's quite a broad question, but if you're able to, I guess, summarize it down or I guess simplify it into what your, I guess, thesis is as to why that is the case.
Yeah, absolutely. Look, I'm a firm believer that there are only three things we all have access to that compound. And if you believe that a compounding gain, this idea that small incremental change ends up with very large outcomes, is important, then of course anything that you can access that you can compound, it pays dividends to focus on. And those three things that we all have access to as business people or just people in life are firstly our wealth. Money compounds up and it compounds down. Interest on loans is a compounding equation. The second thing is our culture, who we surround ourselves with, and that compounds both up and down as well. We can teach good culture, we can build good habits, and we can also ingrain bad habits and bad culture. And then the third thing, of course, is our knowledge. The information that we absorb and learn from continually allows us to compound. We can grow that ourselves, but we can also share it and learn from others. And so I think if you can build an organization in any field, it doesn't have to be in finance, it can be in anything, where you can compound your people's wealth, knowledge and culture, then you are off to the races, because you've got the three greatest sort of elements that we all have access to compounding together, which will result, in time, in incredible outcomes. You give great people great opportunities, back them with the right capital and let them grow in a good culture. How can you not do well? And if you can then iterate that knowledge, learn from what's working and what's not working, and make tweaks to make it better, then again, how is that not going to achieve a great result? And I think that applies as a sort of universal truth. And so what we've then tried to do at TIP, right, is just effectively empower our people, both our customers, our suppliers and our staff, and our organization therefore as a whole, to capture that knowledge in a really tangible, direct way by documenting it, to be able to consistently compound it and share it, to document and capture our culture so that we can teach it, and as we bring new people on, make sure that thirst for knowledge and desire to do the right thing is inculcated, and then apply it, in our case, on the wealth question, not just to capital we had to start up in the back of a garage, like a tech firm would, but in actually managing other people's money to give us that sort of extra kick in returns. And so what's really funny, I've got obviously a very mathematical brain, but not everyone listening may have, but if you only get a few percent return from doing each of those things, but you can do all of them, then the sort of aggregate effect of all of them together means you're going to grow really, really fast, no matter what you do as the leader. So if you can get that operating, your business will thrive. And that's what we've tried to do at TIP and what we spend a lot of time.
So there's going to be 1%
Absolutely.
improvements to everything that add up to those big results.
Absolutely. If
Yeah.
you do nothing, nothing compounds, right? You can't get ahead in life. It's like that lovely old, I think it was Gary Player, but apocryphally at least, Gary Player quote of, after winning one of the majors in golf, geez, you got lucky today. And he said, yeah, I know, it's amazing, isn't it? The more I practice, the luckier I get. And I think it's the same thing in life, right? Like if you just take those 1%ers and you put that little bit extra in, it's amazing how over a period of time, the gap between you and your competitors, or the way in which you can grow, massively outstrips any of your initial thoughts or possibilities.
Yeah, 100%. So your role as group CEO, how did that evolve into what it is today? Where did you start? What did the early days look like of you in the company, and then obviously progressing to, where you are today?
Yeah, absolutely. Look, I think like so many founder stories, you start at the bottom and you do everything until eventually one day you find yourself with some fancy title, right? But yeah, that's sort of what happened with me. So I'm an investment banker originally. I was working in the financial services field and came across to TIP when we were just started. It was myself and one other staff member and our board. And I've grown it ever since. And over time, really just taken that approach of, try and always surround yourselves with people who think deeper, and are more dedicated and are smarter than you, because you'll learn from them, they'll learn from what you've done, and together you'll grow. And so today, really my role is a more guidance and strategy focused role, whereas in the beginning it was picking the stationery, writing the documents, doing all the grunt work, because that's what you have to do in any founder-led organization. You don't get to start with the luxury of people around you. You are the stuff. But it's nice when you reach that point.
Totally. So, I guess now and the business as a whole, what does the next, 3 to 5 years look like for the business, and what's the mission?
Absolutely. We'll keep doing more of what we're doing, right? So if we believe that what we do can compound and compounds fast, then really the best thing we can do is just spin that flywheel faster. So that's my goal, is to get the organization to spin the flywheel faster, to capture our learnings quicker and consistently apply them faster. And then in that process, materially grow the funds under management, the number of customers we service, and our own balance sheet. And that really, there's no reason that shouldn't occur. Like, we put all the good work into getting the foundation and the structure. Now it's really just about empowering the great divisional leaders that we have these days that we didn't have 10 years ago, to each run their area faster than I could ever run it myself. And certainly I couldn't run it at the scale they're running it, all over the top. And then get them to empower the leaders under them for the same thing. It's funny, you mentioned before, what is it that we think I've done well or we've done well in the organization? There's a quote about leadership that's always struck me, and I think it's worth, because it helps understand what we try and do, but I think it's useful if you're building your own business to think about, which is that the real definition of leadership is about creating space in the service of others. And why I love that definition so much is that it changes the onus on the leader from being the visionary per se, or the one doing it or leading by example, to being, that's an obvious important point. You can't create space if you don't have a vision as to where that space is, but it's the reason why you're doing it. You have to be doing that with the aim of doing that in the service of others, so you have to have that idea that you want others to step up into the vacuum that you'll create. You want others to seize your ideas and build them better than you ever could. And if you keep that in your mind, then I think a lot of what you do as a leader to grow an organization becomes naturally organic. Identify a good person, build a system around them, tell them to succeed, set the right structures around them so they can succeed, and then watch from the sidelines as they score goals and cheer them on, right? But you can't do that if you didn't have the vision and the structure and then the desire to let them play. The manager can't play. I'm a big soccer fan, right? The manager can't play all 11 positions, but also 11 blokes on the field with no structure aren't going to win the game. So how do you get that to work in harmony?
Yeah, that's a great analogy, actually. So, in terms of Team Invest Private, right? You've got a few different aspects to the business. So I guess each of those is a little bit different. But in terms of your investment thesis and the way that you go about investing, can you talk us through that a little bit? Because it's obviously takes some of the principles from Warren Buffett, and some of your own, I guess, methods that you've developed over the years.
Yeah, absolutely. For any asset, we can talk financial services, but it can be any asset. It can be property, it can be your personal value, your art, whatever it is. In the end, its value is only going to come down to two questions. The first is, what can it give back to you, whether that's a yield, a cash flow, a return, a capital growth, whatever it is, and some multiple of market sentiment of what someone else will value it at. So, if you take property, it's how many square meters do you have multiplied by $1 per square meter. If you have a bond, it's what's the yield multiplied by a factor. If it's a building, it could be a cap rate. If it's stocks, it can be dividends, cash flows, whatever. And if you understand that most basic fundamental principle, and it is a truism, it's nothing new from me, that's just basic economics, then you realize, or you can realize, that there are two parts to that equation that you can spend a lot of time understanding really well. The first part is market sentiment. And what's really fascinating, of course, about market sentiment is that we know that market sentiment moves like a pendulum. It swings from euphoria down to fear and then back and forth. But it tends to do that like a sine curve or a pendulum around a long-term average. Market sentiments tend to be pretty stable over a long course. And then the second variable over that is the underlying cash flow or value the asset provides. And that's the hard one to model. So most people can get market sentiment right, whether it's in property or any other asset class, finance, stocks, whatever. The hard one that they spend all the time on is the underlying value of the earnings, or the cash flow and the yield. And there's a really famous paper by Drucker and Dreiman in the 1980s, two US academics, that sort of sets the tone for this, which says that when really highly paid financial analysts were asked to forecast earnings 1 quarter ahead, over 80% of the time they were materially wrong. So in other words, making forecasts is, in the words of the great Yankees catcher, Yogi Berra, predictions are very hard, especially about the future. It's almost impossible to do, right? But what's really interesting is if you break the data that they use down into two groups. The first group is when they were asked to forecast things that were inherently unstable. So things that were exposed to commodity prices, to market movements, to changing in sentiment. They're useless. But when they were asked to predict things that were stable, they were right more often than not. So again, common sense, right? If you're asked to predict something that's inherently unpredictable, good luck to you. If you're predicting something that's stable, you're going to be successful. So the first step and the first principle I'd say in valuation is only try and do a valuation on something that you can value in the first place, that's predictable. Because to do a valuation on something that's unpredictable, the range in your margin of error is going to be so high, the exercise wasn't worth it. You might as well have thrown darts at a dartboard. So first step is, I think whatever you're doing and what we're doing is ask the first question of, is this something that is inherently forecastable or not? Buffett talks about it. You mentioned Warren Buffett, but Buffett talks about it as there's three types of investments in the world. There's the yes basket, the no basket, and the too hard basket. And the too hard basket is the vast majority of investments. So, that's what we're doing firstly. Is this too hard? If so, don't do it. Then when you know yes or no, what we do is we rely on that insight that we talked about originally of John's research, which is that picking winners is hard, identifying losers is easy. So let's try and identify if this is a loser, and then by virtue of sort of elimination, be left with winners. And so that's what we do. So today we use 27 quantitative metrics that we know in academic research are indicators of being a potential dog. We then use our own proprietary measure of using the wisdom of the crowd. So this idea that humans pick up things that in qualitative factors that quantitative factors won't see, to further whittle that down. And we try and leave ourselves with a group of assets that are easily able to be predicted. That was question number one. Aren't a dog, question number two. And then where our fellow wise humans have looked at it and said, well, there's nothing I can see that the quant can't. And then we just invest in those and let power of compounding do the rest from there. And that tends to achieve, by the way, just in terms of how powerful it is, it's meant that over the last 24 years, we've achieved an average compound return, gross compound return in the ASX of 18% per annum compared to a market average of about 8.5% in the same period. So effectively doubles your returns without needing to be a rocket scientist, just by knocking out the worst performers. Because of course that average of 8.5 included the ones that did brilliantly and the ones that blew up your money. And if you just didn't blow up your money, you did well.
Doubled it.
Exactly.
That's great. I love it. It's not I mean it boils it down to quite simple, right? You look at it and quite rationally with those 27 metrics, and then that's how you make your decision.
Absolutely.
For
I
the
mean, I made
most
the
part.
comment before about sport. I'm a big soccer fan, but the sport I played best as a kid, not that I was particularly great, but the sport I played best was actually cricket. And
Same
Donald Bradman is
here.
famously supposed to have said that cricket is a very easy game made difficult by those of us who play it. And I sort of think the same with life and business and investing, right? Like at the end of the day, you can break it down into some pretty simple things you have to do. The challenge is doing those simple things because the world intervenes, right? Like there's all this noise out there, there's all these things that happen in your life. How do you stay true to your principles through all of that noise? That's the hard part. But the principles are easy. So it's common sense investing, right? Avoid the dogs, use your fellow wisdom of the crowd to sort it out, stick to things that are predictable. And I can say that every day of the week. But it's hard to do it, isn't it, right? Like in our own life, like to stick to that kind of principle because there's constantly new information coming to you, new opportunities, FOMO, fear of missing out. You don't want to miss out on the next opportunity. And all of that affects our decision making in ways that make us stray from those simple principles. But if you can stay on track, you win.
That's it. That's it. So, education obviously a big part of your company. I guess how do you go about the education? And I guess who is really your ideal target when you're doing the education? It's obviously high net worth individuals looking to improve their investment decisions or
Yeah, so we have two main groups of customers. We have our Team Invest brand, which focuses on high net wealth individuals, trying to teach you how to manage your wealth more wisely. And what we mean by high net wealth there, because it's sort of a amorphous term, people who are both what I refer to as a bit of asset and time rich. In other words, you've built up enough money or enough assets that it's worth you spending the time to manage those assets. So, if you're 22, you're working your first job, you're probably not in a position where it's worth putting the time in to learn how to manage your assets better. But anyone who's sort of over the age of mid-30s and has accumulated a reasonable amount of wealth in your life, it totally is. A few extra percent return on what you've got can be meaningful over the long run. So it sort of kicks in there. And then the second group of our customers that we deal with under our tip brand are big institutions, NFPs, other fund managers. So professionals, boards and intermediated groups where they are trying to make better decisions with other people's capital. So whether that's a company making better investing decisions for investing in a plant or a factory, or it's a fund manager trying to make better investing decisions with funds that they manage, or an NFP trying to manage their endowment or their operations. And for us, it's really the same education question. What we're trying to do is teach them those simple principles and the tools to eliminate bad decisions in their specific need. So, in the case of a high net worth investor, it's how do you do that across the asset classes that you're exposed to? And if it's an NFP, it's obviously their asset classes and their decisions. And in the end, it all boils down to the same point, which is that combination of knowing how to avoid a loser and knowing how to strip out the noise. And often knowing how to strip out the noise is the harder one.
Yeah, I mean, there's a lot of emotion that comes into investing and being able to take that out. It's like property. People get hooked on one house and then they overpay for it and they've lost 2 years of returns that they could have potentially got. So it's very similar with obviously buying. And you obviously mentioned in some of your material online is picking good businesses rather than just stock picking. And I really like that because you are picking businesses at the end of the day as well when you're investing. So, I mean, in terms of that, it's obviously a switch in mindset as well. You're not looking for these, one in a million unicorns, but you're just looking to invest in good businesses that grow over time. That's my understanding.
Absolutely. I mean, that unicorn comment, with the risk of nerding out, is such a fascinating one because the original term of unicorns in Silicon Valley was coined because they were meant to be mythical creatures. They didn't exist. This idea that you could find a business that within a few years was worth $1 billion. It was a unicorn. It was a mythical creature. And now, because we've seen it happen a few times, we've started to use that term as if it's something that's real that we can pick in advance. And of course, there's no evidence whatsoever out there that you can pick unicorns. Even the best investors in the world don't pick unicorns. They get lucky. Sometimes they have them, they know people, or they get into the unicorn halfway through its journey. But they don't pick it in day one. That's luck, right? And I think that's the mindset that makes it so hard. And we talk about that. You mentioned, about you're investing in businesses, not stocks. When you see them as a ticker on the ASX or the NASDAQ or the Dow Jones, you can divorce yourself from what they do and get caught up in all the noise and all the hype or the fear or whatever it is. When you stop looking at them as a ticker and you just start thinking of them as a company, then you eliminate a huge amount of the noise in the decision-making process, and that means you're much more likely to make a good decision. There's research from Daniel Kahneman that points out that 85% of all errors we make as humans boil down to noise, not bias. So that idea that it's not that our decision was wrong or biased, it's that we answered the wrong question because the world was noisy around us. So if you can just eliminate a fraction of that 85% of error, halve it, your results are going to be so much better because half of the mistakes you were going to make, you won't make. And that's worth money.
Definitely. So,
and in relationships, it's worth a lot too.
It is. So, obviously, the success of Tip Group obviously comes down to obviously your team, but also yourself leading the vision and I guess the company, right? I guess is there anything that you do personally to set yourself up for success? Obviously, you started out. I remember our early conversation about you starting in telemarketing. Obviously, it's a tough space, right? You obviously have no's is what you hear all the time, and then obviously investment banking. So you've had quite a journey. I guess is there anything that has set you up well for success, or is there anything that you do on a daily basis to keep operating it at your peak?
I think it's a really good question. I think I mentioned it before around that idea of compounding culture and knowledge, but you can really put that into practice for yourself. So I tend to try and focus on two things always. The first is, what have I learned today or last week from what I've done? What have I done that's worked and I want to do more of that? And what have I done that hasn't worked and I want to learn from that and amend? And I think that's hard for us often to do about ourselves, but you can get into the habit of doing that. And if you're sort of objective about it, you don't get too caught up in I always have to be right or, I've always got to be the smartest person in the room or anything, then you actually can really improve your own ability really fast. So that's the first one. And then the second thing is that cultural idea that you want to create an environment around you where others can be their best, because by them being their best, they'll make you your best. And so I think if I have any advice to give anyone that I sort of look back on what succeeded for me, I'm an naturally very intellectually curious person, and I've always got a lot of joy out of watching other people succeed. And I think in my case, the lucky ability to put those two together has given me in the beginning a lucky edge. And then I've worked on trying to make that happen going forward. And you take any organization, it's going to reach a point, if it's succeeding, where it's bigger than the person who started it or who's running it. And if you can let that happen happily and organically and encourage others to outperform any of your ideas and work back with you, then you've got 600 brains in our case now working on that question instead of one. I don't care how smart you are, 600 people are going to beat you, right? So if you can have that sort of mentality, or that's what I keep telling myself, I can have the mentality that it doesn't matter who came up with the idea, it doesn't matter how it happened. What matters is it the best idea? And then can we reward the people for doing it, so that we get more of it? Then it's kind of hard to fail, even if at times it's sometimes a little humbling because someone that you didn't think was going to give you the answer does, and you think, why didn't I think of that? But that's a good thing, not a bad thing, right?
Definitely.
And I think
So,
it's that sports side, I mean, like most Australians, right? Like I love sport. And I think you have to learn pretty early on, most Australian kids, that you're not going to play for your national country. So you're going to have to get joy out of watching other people do it. And it's the same thing in business, right? Like I'm not going to be able to be the best at everything. So I've got to get joy out of other people doing it. And then in the same way as I can have great fun at the cricket or the rugby or the soccer or the AFL watching my team win, why wouldn't it be the same at work?
I love that. I haven't heard anyone talk about it in that way. But so in terms of your leadership as group CEO, were you a natural leader, or is it something that really had to develop over time?
I don't know. You're probably better off asking other people than that. I mean, I think I've naturally always been someone that wants to run towards the challenge, which is sort of one of the requirements to be a leader. You've got to be the kind of person who sees hard problems as opportunities rather than as things to be scared of. But I think, as with anything in life, you got to work at it if you want to be good at it. And I know there are plenty of points in my career, and I'm sure I'm no different to anyone else, where I look back on now and think, oh my God, I was such an idiot. I handled that so badly. How did I mess that up? Either with the way I handled the person or the situation or my own emotions. And again, to my point before of learning from that, admit that, but then don't let it deter you from being better next time. Just take the learning and apply it rather than spending hours agonizing over why did I mess it up. Just look at it objectively, say you messed up, apologize, and move on. And I think that's something that the better you can be at it, the better you can be as a leader, because you're not going to get everything right. Like, I don't care who you are. There's no way you're operating at 100% all the time. So just admit it and try and learn
Yeah,
from it.
yeah,
Be my
definitely.
advice. And
So,
I'm certainly not perfect at that either.
in terms of your journey, right? What have been like some of the key highlights or challenges that you've had to overcome?
Yeah, I think I'll give one personal one and then the work one. I think for me, the biggest challenge individually was stepping back and having to realize that no matter how much I want to run at 100 million miles an hour because I see where I want to go, that's a bad decision. It's not going to work because I can't take others on the journey at that speed, no matter what it is. And I think that was really hard for me to understand. And a lot of my early failures as a leader boiled down to exactly that. I wanted to get here quickly. I didn't put enough time and effort into explaining why and other people why they should do it. And then we may have got there, but we got there because I brute forced it. I sort of use the analogy when I talk to people about it of it was like I was trying to go around and do things with a trolley with one bung wheel. You can get it where you wanted it to go, but it was a hell of a lot of hard work, and I may have knocked a few things over in the process. And sort of maturing as a leader, you learn a bit better how you can get all those wheels of the trolley to be working, or maybe pick the right trolley to begin with. And sort of, they're the kind of analogies I try and work with. And then from a work point of view, I think just accepting and realizing that the world doesn't operate in a nice straight line. The ideas that are great ideas will fail not because they're bad ideas, but because something changes outside of your control. And other ideas that may not have been perfect will work because the stars align. And you've just got to be nimble enough and humble enough to accept that rather than to keep flogging the dead horse on the great idea that's not working or, holding off on a matter of principle from doing this good idea that is working, but you don't think it's perfect. And that's hard, I think, particularly for founders. We're sort of by nature entrepreneurial people. We tend to approach whatever we're doing because we saw something wrong that we want to change in the world. You know, there was a problem we wanted to solve. And so only solving it 50% is really hard because you want to solve everything. But in reality, 50% solved is better than 0% solved. So you've got to learn where you need to step back and just say, this is good enough for now, and we'll come back to it. And that's hard, emotionally, if not monetarily.
Yeah, no, totally. I get that. Yeah, it's definitely hard to, uh, man, it's been a great conversation. So, in terms of, I guess, if there was one piece of advice that you could give to your younger self, what would that be?
Harness your curiosity better. I think in the beginning of my career, I was curious because I found value in it and I enjoyed it. And I did spent less time thinking, how can I make others curious and help them learn from it too? And I think as I've got better at doing that, I've seen far greater results. But I think that's a maturity problem as well, right? It's really hard at 18. Not that I was 18 when we started, but think back to 18-year-old you. It's hard at 18 to admit that you're not always right and that you're doing this not just for yourself. That's not how we work as 18-year-old boys. Naturally, that gets easier as you get older. But if I don't know whether my younger self would listen. I think this is that classic challenge, right? Of you sort of get asked these questions of what would you tell your younger self or what would you do differently? And then you've got to put yourself back in the shoes of who you were then and ask, would you have listened? And I think my father, if he's listening to this one day, would turn around and say, I told you so. Like that's what I was telling you when you were 15, but didn't mean I was going to listen then. And it doesn't mean if I was telling myself that again, that I would listen. But I think in general in life, if you believe that knowledge compounds, both for yourself and for others, then investing in knowledge early on is the most valuable thing you can do. And by that, I don't necessarily mean book smarts. It can be any kind of knowledge, but it's just invest in learning from others more. There's that line from Ted Lasso of be curious, not judgmental. I don't think younger me asked enough questions. I think older me asks more questions. And I don't think I'm the only one who probably thinks that. And I sort of look back at some of the people I was exposed to when I was younger and I learnt from and think, how much more could I have learned if I asked a few more questions?
Right. In terms of wrapping up here, if people want to get in touch with yourself or learn a little bit more about how you can help them and Tip Group, where can they find you? What's the best thing for them to do?
Yeah, easiest either just jump onto www.tipgroup.com.au and follow through the contact us, or if you want to reach out to me direct, it's andrew.coleman@tipgroup.com.au.
I appreciate your time. It was a great conversation.
Thanks, Alex. I really enjoyed it.
Thanks, Andrew.